focus now on the macros. Leif Eskesen of HSBC joins in to talk about that. Leif, hi, good morning. Good to have you on the show. Before anything else, what have you made of this almost one-way run on the rupee, the fact that it's hit almost 57, and where do you see it headed?
Yeah, that's right. I think that is certainly going on at the moment. I think what's effectively taking place is it's global factors playing a role. I think there's a lot of bidding on the dollar side as well, speculation about the extent to which the Fed will begin to taper off QE, what will be the implications for inflows into emerging markets, including into India. And of course, in that context, India is running a large current account deficit. So on a relative basis, you can say that the currency is somewhat more susceptible to the risks of should we say, a tapering off and the potential implications for that. I think that's really the key reasons. Looking ahead, I would still say, we look at the tapering off in the U.S. as probably coming somewhat later than maybe some people are banking on. We're looking at the Fed starting to taper off probably starting in December. It's going to be very gradual. I think also some of the real economic numbers we're going to get out over the next couple of months, especially related to the labor markets, will suggest that it will be somewhat later. So when that starts to happen, maybe a reassessment of what's going to happen to Fed tapering off, if we start to get a little bit more traction on growth in India, maybe over the summer period when we have a little bit more traction on reforms, then it can be more conducive for the currency in the second half of the calendar year.
Some of these issues like the twin deficit, etc., though, are not going to go away in a hurry, Leif. Would you say that this is probably going to be levels around which the rupee will have to stay and people will have to come around to? I mean, are you expecting any sharp pullback, or you think this is more or less a reasonable range for the currency?
I think it, in the short term, I think will continue to potentially linger around current levels. And I think as we move into the, should we say, second half of the calendar year, we're still looking at the end of this the end of this calendar year, maybe around 54 against the dollar. But in the short term, I think we'll be relatively tight range for now, until these, should we say, we have more clarity about what's going to happen in the U.S. with respect to Fed tapering off.
Okay, let's talk for a bit about the PMI figures that we got, Leif. What did you make of them, as also the internals within that composite figure?
Well, it was a little bit of a mixed bag, right? We had first the manufacturing PMI coming out that basically showed the manufacturing sector more or less at stall speed in May. Two reasons for that effectively. Number one was the supply side. So there were still reportings of power outages effectively preventing manufacturing business from operating at full capacity. That also meant that they were not able to meet their orders, so backlogs of work picked up. But there was also some slowdown when it comes to demand side of things. So domestic demand did ease off to some extent in May, and that also had implications for activity levels in the manufacturing sector. In the services sector, on the other hand, there was a recovery in growth in May, also led by a recovery in domestic demand readings effectively. That could have been led, in our view, by some of the improvement we've seen in the more sentiment-sensitive sectors in the in the financial services segment in May. I mean, there was certainly some improvement on that front relative to what we had in April, and then also possibly a little bit less of a, should we say, scale back when it comes to government spending in May. So that could have lessened, should we say, the pullback we saw in previous months when it comes to community and other related services. So that's some of the reasons we have there. In both cases, both the manufacturing and services PMI, we did see a continuation of easing in underlying inflation pressures on the back of weaker global commodity prices, and also to some extent because domestic demand remains somewhat, should we say, moderate, and that's, should we say, lessening the ability of businesses to really pass on higher costs. The pricing power has been receding a little bit on the back of that.
You were one of the first to flag off the growth warning for the year gone by, Leif, and indeed we've closed up with a sub 5% kind of track. How are you feeling going into FY14 in terms of both the quality of growth, given the point you were making about these PMI trends, as also at what point in the year we're actually going to see some kind of meaningful pullback in growth?
Yeah, I think, as we've discussed before, I think in the very short term we are looking at growth in annual terms for GDP, for example, moving more or less sideways. So I think the first quarter fiscal GDP numbers we're going to get out are not going to be much different from what we had in the previous quarter. In terms of year-on-year growth rates. I think also in terms of sequential growth rates or Q-on-Q, it's going to be more or less the same as we had in the previous quarter. Ultimately, I think we have to be somewhat deeper into the fiscal year before we start to see a gradual recovery in growth. That would have to be led by basically two things. Number one is that we start to see a continuation of reform announcements from the government, hopefully starting over the summer as the monsoon session kicks in, and also implementation of previously announced reforms. In addition to that, of course, the investment side is important, and the expedition of investment projects through the investment committee. We should hopefully get some more, should we say, implementation on that front as well. That will begin to slowly, should we say, improve the domestic capex cycle, investment cycle. And then also I think in this second half of the fiscal year we'll get a little bit more, should we say, tailwinds from the global fund. We do expect the US to gradually pick up during the course of the year, led by private consumption and investments. And in China's case, we also expect a recovery in the second half of the year, probably closer to the final quarter of the year. So these factors will also, should we say, aid the domestic traction on reform in terms of providing a little bit of a lift to growth. But overall, again, I think the recovery in growth is going to be quite flattish, a very protracted recovery that we're looking at.
The early onset of the monsoon seems to indicate that there may be some temporary, if anything, relief on the inflation numbers as well, Leif. Given the point you're making about growth, how do you think the Reserve Bank is going to process all that information, and what do you think they're going to do when they meet next on rates?
Yeah, you're right. So far, the indications from the monsoons are promising, so that's good news. We have also seen, as I mentioned earlier, the PMI readings suggesting that inflation pressures are tapering off. We expect that at least WPI inflation will continue to gradually ease over the next couple of months, and so that would give some, should we say, comfort to RBI in terms of cutting policy rates. So we think there's a good chance they may cut by another 25 basis points here in June, potentially a little bit beyond that in the following months. But I think it's very, very important when you look at the inflation picture in India to not get, shall we say, fooled into complacency by solely focusing on the WPI inflation number. That number is quite, shall we say, susceptible to what's happening to global commodity prices, number one. It's a relatively narrow definition of inflation because it doesn't capture inflation in the important services segment of the economy, which is the biggest chunk of the Indian economy. And then thirdly, it's also capturing, should we say, inflation at the factory gate, not at the level where the consumer is facing inflation, right? So I think it'll be important for RBI to continue to focus also on CPI inflation, focus on the elevated current account deficit that's still there. So I think there is some scope for monetary easing in the short term, but not a lot.
Good speaking with you as always, Leif. Thanks for joining in with your thoughts. That's HSBC on growth.